I forget to record it. Mr. Ramchandra is a doctor, medical practitioner. He gives the following information. This information is connected with his household and profession. So they asked to prepare profit and loss account for profession. Profit and loss account for profession. Then profit and loss account for profession and income and expenditure account. Income and expenditure account for household. Okay. So in the receipt and payment, cash in hand, cash at bank, asset related to opening balance sheet. Then consultation fee, it is relating to profession, go to income and expenditure account, credit side. Medicine sold is the income connected with profession, go to income and expenditure account, credit side. Interest on private investment. Interest on private investment is the income connected with his household. Therefore, it is relating to income and expenditure account, credit side. Consultation and medical fee go to P&L account, credit side. Okay, P&L account, credit side. And this item go to income and expenditure, credit side. Two are related with profession, one is related with household. Then come to the payment side. First payment is rent. This rent may be related with household or profession. So according to given instruction, you take. If it is profession part comes in the P&L account debit side. Household portion comes in the income and expenditure account debit side. Medicine purchase. Medicine purchase is a professional expense. It comes in the P&L account debit side. Car expense. Car may be used for profession as well as household. So according to instruction, you have to take. Then telephone expense. Telephone may be used for household as well as profession. Salary and wages. Salary and wages are related to profession. Sometimes they may be also related to household. Okay. These are the expenses coming on the debit side. But you have to check that whether it is relating to profession or relating to household. Okay. Then life insurance premium. Life insurance premium is, it is not related to profession. It is his personal expense. So you take in the income and expenditure debit side. Household marketing. Household marketing is related to household related expense. You take in the income and expenditure debit side. Guest entertainment. Guest is related to personal. Guest is related to personal. So you take on the debit side of income and expenditure account. Miscellaneous household expense related to household. So it comes on the income and expenditure debit side. Purchase of television set. Purchase of television set is a asset. It goes to balance sheet. It is not relating to revenue item. It is a capital item, goes to balance sheet. Cash in hand, cash at bank. This is the asset, goes to balance sheet. Okay. These are the assets, goes to balance sheet. Now you see the adjustments. What are the adjustments? The first adjustment is stock of medicine. Stock of medicine is the closing stock. 8,000 is the closing stock of medicine. This may be considered as closing stock and taken on the credit side of P&L account. You may take this on the credit side P&L account, or you deduct in the purchase of medicine. You deduct in the medicine cost. Medicine cost. Both is allowable. Okay. Now you see the rent. Rent for the month of March is outstanding. 2,400 rent is outstanding. So this rent you add in the rent. This is the rent outstanding. You add in the rent, and outstanding rent goes to balance sheet. Okay. Then electric charges amounting to 2,400 and school fee 4,000 were paid by Mrs. Ramachandra. Paid by Mrs. Ramachandra. Not yet been reimbursed to her. not yet reimbursed to her means these are outstanding expenses. So these expenses you take in the respective account. Electricity charges may be relating to household as well as profession. But the school fee is not relating to profession. School fee is totally connected with household. So you take this school fee in the income and expenditure debit side. Okay. Then next adjustment is from the following expenses are to be allocated in the ratio of 1:3. 1:3 between profession and household. So 1/4 portion you take in the profession, 3/4 you take in the household. That means 1/4 in the P&L account, 3/4 in the household. What are those expenses? First, rent. Out of total rent, out of motor car expense, then salary and wages, telephone charges, and electricity charges. How many items? Rent 1, motor car 2, salary 3, telephone 4, electric charges 5. 5 items you have to allocate. 5 items are common. So out of common, 1/4 you take in the P&L account, remaining 3/4 you take in the income and expenditure. Okay, so next the entire profit you transfer to household means income and expenditure. This is same as previous case. Okay, in this way you complete the problem. In this profit and loss account, you have to take professional related items. Okay, see here. First, consultation fee is relating to profession you take. Second, sale of medicine is relating to profession you take. These two are the only incomes. These two are the only incomes of profession. Then you take the profession related expense on the debit side. Profession related expense on the debit side. What are those expenses? First expense is rent. You take rent. Rent is 24,000 total. Add outstanding. Outstanding is 2,400. So total it is 26,400 rent. Out of this you take 1/4. 1/4 is relating to profession. So 1/4 you take. 1/4 of this is 6,600. Okay. Next is medicine. Medicine is 1 lakh rupee. Out of 1 lakh rupee you deduct closing stock of medicine 8,000. Otherwise you take this 8,000 in the credit side. Both is permitted. 1 lakh rupee medicine you write in the debit side, and closing stock of medicine you write on the credit side. Both is allowable. Okay, 92,000 is the medicine expense. Then you take the car expense. Car expense is 8,000. Out of 8,000 you take only 1/4 related to profession. Next is telephone expense. Telephone expense is 4,000. Out of this 4,000 you take 1/4 only. You take 1/4 only. 1/4 of 4,000 is 1,000. Then next is salary and wages. Salary and wages is 24,000. Out of 24,000 you take 1/4. 1/4 of this is 6,000. Okay. Next, electricity charges outstanding as per adjustment. Electricity charge is 2,400. Out of that 2,400 is 1/4 is related to profession. That is 600. Okay. And these are the expenses. You take these and take the total. Total is 2,60,000. Then you take the difference. Difference is 1,51,800. 1,51,800 is the net profit of profession. And this profit goes to household. That means income and expenditure account. Now you prepare the income and expenditure account. This is income and expenditure account. Okay. In this income and expenditure account, you have to take household transactions only. Household incomes and household expenses. Household incomes and household expenses. So first you take the P&L account, profit. Profit is 1,51,200. 1,51,800. Okay. Next, you take interest. Interest, private interest related to household, 8,000. Okay, two are the incomes. Then you take the expenses. First, rent. Out of 26,400 rent, 1/4 is taken in the P&L account. 1/4 is taken in the P&L account. Remaining 3/4 you take here. That is 19,800. You take 3/4 of the car expense. 8,000 is total. 3/4 you take 6,000. Then telephone expense 4,000. 3/4 you take 3,000. Then salary and wages 24,000. Out of this 3/4 18,000 you take here. Okay. Next is electricity. Electricity you take 3/4. 3/4 is 1,800. 1, 2, 3, 4, 5. These 5 expenses are common. Out of these 5 expenses, 1/4 is taken in the profession, that is in the P&L account. Remaining 3/4 is taken the income and expenditure. Clear? Then you take the remaining expense of household expenses. Life insurance premium is purely related to household. Then household expenses 20,000. Then miscellaneous expenses of household is 20,000. Okay. Then guest entertainment is 10,000. Okay. School fee related to household. These are the household expenses purely. That means life insurance, household expense, miscellaneous expense, guest entertainment, school fee. These are purely household. So you take the total amount. Then you take the total. Total is 1,59,800. 1,59,800. Then difference is called as net profit 42,800. 42,800 goes to balance sheet. Net profit goes to balance sheet. Okay, this is the problem number, I think, 9.